Hear me? All right, Jan has started recording. We seem a little low on the numbers here. Let's see. I feel like there's a few people that'll probably be coming in a few minutes late. Or they're still trying to get into Coinbase or something like that. Okay, good. I'm glad the sound's working good. Glad I'm on Binance. That's all I have to say. But anybody get any buys on this huge dip? Right? I'm like, not going to see these prices again. So I put some orders overnight and man, they got filled. I even got the lowest possible order. I put in this order because the altcoin plan is to buy on every 25% dip, and I had one, and I was like, it'll never get there for Doge at 22 cents, and it got filled, and then it flew out of that range. I was like, whoa! So I was excited to see that, and then it slammed through some Binance orders. when I had some of those BNB and Cardano. I'm already kind of maxed out where I want to be with that. But yeah, man, those things are crazy. So I know not everybody's in this, but crazy night. Crazy night. Oh yeah, just got to throw those orders out there and see what happens. And I was surprised to see them get filled. But, if you look at Bitcoin, people are panicking, freaking out, and it just stopped right at the 50% mark, which we seem to talk a lot about, right? Just hit the 50, and Oliver's been talking about a day where Bitcoin will move $10,000 in a day. Turns out the first move was down in that amount, but if we close above 38,000 today, Bitcoin will have made a $10,000 move. It just no, not a $10,000 move, but it will be the largest single day move that it's ever had. And if today closes as a bottoming tail, that would be massive. So I don't know. Let's see what happens. While everyone's panicking, I'm going, geez, let's see where this closes, because it could be a very exciting turnaround if it goes the other way. So meanwhile, we got to get back to putting it all together, right? So our purpose here was to create something to take the checklist and put together a process so that you guys are not doing the trading. It's not you, the person that's trading. It's the plan that's trading. And you get to be totally relaxed, right? Because it's not about qualifying. It's not about like you making choices about what trade you're going to take, right? You have it planned out in front of you, right? It's sitting there. And so here's your checklist, right? You have this printed out on a piece of paper. Your job is just to start filling this in, right? So, you put in your symbol, whatever that is. Let's say it's Apple, right? You put in the date, and you spot an event, you circle it, you spot a position, you circle it. What kind of entry did you use? I'm sorry you can't see MLPT here. What kind of stop did you have? Were you long or short? Size, just in case you're doing something that has an event stop. Is this a large size risk, a small size risk? It's good to have that. I mean, you can also use this for maybe an R unit more style trade, but I don't think this is as important. Then what kind of ad did you have? Did you add on the first pullback? Did you profit take on 3 pushes? Did you get the new high or low? Right? You just circle it, right? And then what kind of how did you trail out? Right? That's it. You can circle these things, and you don't have to think too hard about it, right? So this is what I use. I do this very thing, and then you can write in your P&L right here, and mark if it's a win or loss, and then you can move on with that. But you see how this works, right? You're just going to have your checklist right in front of you. And now you don't have to go searching for anything. It just has to produce this, right? So if you have to like turn your head to the side and think a lot and blah, blah, blah about whether it's fitting this checklist or not, maybe you're going about this the wrong way. It needs to qualify by hitting these things, and then you just take the action. You sit back. You should be totally relaxed. Your goal, like how you want to feel, like what is it to be on the master trader side of this? You're totally relaxed because you don't have to do anything. Your decisions are already made for you, right? Your job is just to do the process. And then as we go along, right, and this will help you, right? So this is something you can print up. It's in the file folder in the lower right-hand corner of Omnovia. In case you're having trouble remembering, right? If you're in this location, you're looking for these signals predominantly. You know, if you're in this location, you're looking for these signals. It reminds you what kind of stop you're going to be using, right? It reminds you about how big you want to go on that kind of trade. You know, if you're in a perfect fabulous 4 in a plus position and you got a great bull elephant bar, you might want this to be a larger size trade because you know that when you have the picture of perfect, that's the one you really want to take off, you know. And I would say, you know, size here, I suggested some things, but I think for any of these positions, you're going to figure out what is the perfect picture. You know, if you get a low risk, brilliant entry, you might go big on something up here, you know, or if it's perfect, if it's clean, if it's clear, if it's trading well, right? All this, of course, is the same down here, all the same principles, but you know, in case it wasn't clear to you, your location kind of defines what kind of signals you're looking for. And today was kind of a tricky one at the open, right? Because we're kind of in triple minus when the whole market goes there. Predominantly, you're going to start oftentimes with everything buying and then doing this and then later selling, you know. I don't know what it's doing right now, but because I've been kind of watching to see if Bitcoin's going to end its tanking today. But you know, today's a day where it could go back down later, or it could keep going. You know, you just don't know. This would be a good place for the stock market to turn around too. You know, could it be over? You know, could this massive uptrend be over? Sure, but if you look at it on the weekly charts or monthly charts, it's not over. You know, it's just pulling back, right? So yes, massive gap down oftentimes means that right off the open it's going to snap first, and you'll oftentimes get a whale in that direction. Like I played Microsoft, right? And it'll, you know, you'll get this, you'll get a first pullback, and you'll get a new high. But after a massive, down gap like that, what is this from the short end? Well, that's your double dip, right? And this is where it might be starting to lose, lose its energy, and now you can get back on the right side of the gap. See, and I'm just saying this when the whole market gaps down like this. It might be different than just one stock doing a triple minus, and you're just looking for bull signals that could run all the time. There's something like about these really bearish days that you do have to be careful with. But Oliver was saying that he used to get into a lot of trouble on days like this. So it happens, yeah, and I can second that as well. These are trickier days, right? So Moving on though, right? You've got this in front of you to help if in case you need to remember. You look at the location and go, what kind of signals? And then when you see that bull signal or bear signal, you take it and you don't even think about it, right? You don't have to think about what kind of stop. It's already determined for you. And then you're going to mark down all this information on your 20 trades list, right? And you're going to identify your biggest errors, right? And you're going to be scientific about it, right? You write them all down and go, geez, I moved my stop too soon 4 out of 20 times and I missed, a lot of a lot of big gains, and I caused some problems, right? So you figure out which one you're doing the most, and next week you cannot have that problem again, right? Next 20 trades that you do, you've got to eliminate that one, right? So that's the most important thing, right? You need to have it written in front of you. What's your biggest error? You guys might even benefit from just handwriting out your checklist on a piece of paper. And since you've taken the time to do it, you can just say, I'm only going to do what I wrote out on this piece of paper. Now this is something that could change, for those of you that this is new, this could really change how you look at a lot of things. You're making your journals of all the trades that you take, and I'm going to suggest putting them in folders and sorting them by position, right? You have all the single minuses in one folder and the double minuses in another and the triple minuses in another, right? Maybe you have some that are just igniting off the 200, dual zones. These are just suggestions, things that I've made that I've found interesting. So dual zones is another way of saying a wide state. Sometimes you get these really wide state plays. Either it opens that way, or you kind of have a whippy fab 4 zone here, and you get a bull event and it gets way up in here, and you just go, well, here's a double top, here's a short, that's a wide state play, and that's a checklist trade. You can start up here when things are like, here's the 200 and you're way above it, here's the 20, you got way up here, here's prior days, trading, and you can just say, this is really, really high, and here's a market law 4. Now this is not a scalp. This is something that should make multiple moves to the downside, right? And maybe you want to have a folder with those kind of trades, right? You definitely want to keep track of this trap zone stuff. Imagine you have a folder with 30, 40, 50 trap zone plays, and you just went and opened them up and realized that, geez, you get about 1 to 2 pushes and then it ping pongs back up here and it does this all the time, and you start to realize why we're not big fans of the trap zone, And you'll have some outliers that just take off and keep going, right? You will have a few of those, but you're going to realize that if it's only 3 in 10, then the odds aren't good for you there, right? And you'll be able to just flip through, 10 or 20 of these things and just put an X down. Write a question. Like, I challenge you guys to do this. Fill these things up, right? And I use uncategorized for I haven't had time to sort and put it away. So I put it in an uncategorized box where I've started the journal, but I haven't filtered it into this other stuff. But ask a question and just go, okay, how often do I get a whale complete out of a plus location when the first bar is perfect? And then just start flipping through there and just put an X every time, count how many you look at. Let's say there's 20 of them, and then start marking how many times when you have a perfect bar that you get the whale complete. And then maybe another, if it's not a perfect bar, let's just say, versus the non-perfect ones, and you're going to see that, Well, the non-perfect ones are, have much more, mixed results, right? Ask yourself a question and then see how often you're right. I mean, these are trades that you have taken, that you have identified. What would happen if you just, take these perfect positions and asked, how often does the Fab Four hold? Am I getting stopped out and then in the end the Fabulous Four held up? Wouldn't that be amazing, right? If you could look at that and know your statistics. I usually bail out of this way before max loss per trade and take some stop, and in the end, well, even if you don't, does it hold up? Does the Fabulous Four hold the price? If you know the answer to that, won't that change how you trade, right? I mean, part of the point of doing this is to take you out of it, right? And know your numbers and know what is likely, to know that this is based on of trades that you have taken, how often this works. What if you go to position double minus and you look at 20 trades, and first I would rate or rank the first bar. So your entry bar, give it a ranking. So if you ranked your entry bar in terms of power and clarity, and then if it's if your clarity or your strength or your power of your first bar is like kind of weak, so you've got some bar that looks like this, and then you take the entry below the low at at this location at double minus. How often does it go up, right? And maybe hold the 50% zone and then continue down, right? I bet that would open a lot of eyes. Like, so here's your Fabulous Four up here. Here's the 50% zone. Your initial bar gets taken out, but the second play really goes. It's kind of like a double dip, isn't it? You'll see this happen a lot, and it really happens when your first bar of the day is kind of weak, right? But you take it anyway because you feel like it. But it's not really following the checklist. The checklist is not asking you to take anticipatory kind of maybe this, maybe that entries out of a double plus or double minus location. It's not saying to do that, right? It's saying identify power, right? Identify power and take those entries, right? So you'll be able to go through trades that you've taken and go, geez, I keep jumping into these ones that don't have power. You might find that, right? Now, Dennis is asking, do you name your files with position at the opening? Well, it's right on your checklist, Dennis, right? So I'm not sure I understand your question, right? So your checklist says what position. When you catalog these? Oh, yeah. So it's part of the naming process, right? So I try this. Name the file, like instead of like Apple, right? This is a good way to do it. So here's Apple, and then put the date like 5/18/21, but do this first. In front of it, put minus, 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 and then Apple 5/8, right? And then, because this is the name of the file that you've saved, it's easy to just sort them and dump them right into a folder, right? You see that? So once you've done your artwork on it and you've made your journal, name it and put the position in the name. and then it's really easy, right? Yeah, it really helps you organize everything. So I do that now, and it's made things a lot cleaner. Right? So, and that's it, right? That's really what this does. This allows you to get organized with your trading, eliminate your errors, look at a batch of things, and this, I always say this is the comparing apples to apples, right? How is a bull elephant bar, a nice clean bull elephant bar, going to perform in this position versus this position, right? Totally different, right? And you're just going to get to see that, like, it's different and it's not different, but like the quality of this bar, for example, can be less important when you have a perfect fabulous 4, right? I would say that if you're in position double plus, the quality of this bar is more important, right? Do you understand why? Like when your position is perfect, and you'll hear Oliver talk in the morning, and he'll say, "Man, this is the picture perfect position." Then he's saying it almost doesn't matter what the event looks like. It's like he's just like that. It's so unlikely that it's going to run through the fabulous 4. But when you're in here, why does the quality of the bar matter so much? Why does the quality of the bar matter so much at double plus? And I'm just going to say that as we go through some of your journals and look at charts and stuff like that, you're going to see that these weaker ones, they've got nothing to support them, right? And they're just more likely to be a pullback first and then, a move up, right? It just, when this power isn't there. So these are the little tweaks, the little things that, I'm telling you this, I'm just saying to look for it, but you have to make it your own. I can't make this your discovery. So, that's how you put all of this together. And for any of you that are new this series, I'm hoping that this has solidified, and please ask questions if there's anything unclear about the process, right? So that's the end of putting it all together. I'm going to go into some journals now, but I hope this has made it clear for you what you're trying to do, right? All right, there we go. So I want to take off where we continue where we left off last time. We had a trade here from Betty. I want to go through that. And let's see. So we identify something. Now, guys, what would you call this position? Betty has labeled this triple minus. Edward, I use Snagit. Yeah, I would give that a double as well. I mean, this is Starbucks, but she's taking this down here. Double minus, went long 3 lots, and just kind of, missed the new high here. Now, I think believing that this was a triple minus was the problem here. It just wasn't. And you kind of have to draw in the high and the low of the day, right? And then look at this and go, yeah, I see that we got this here. There is a 180, but where are we really located? We're located in the perfect spot for this to fail and continue lower, right? And it does look like a higher low, and I get that. But, I think she did a good job of stopping this out here, but in the end, this is and it's at the 20 MA, right? You guys can see that. Like, Betty's looking at it this way. Here's a fluid move up. Here's a pullback that triggers at 50%. It seems to be catching the 20, and it just fails. And there's actually nothing wrong with that. There's nothing wrong with that. It's just the real first move of the day was this, down to here. This is the first fluid move. And then how are we going to rate this move up? Is this igniting, or is that a pullback? Look at how these bars form. Is this igniting or a pullback? And what makes this look more like a pullback? Okay. There's that, but what about this? Look at the size of these bars. Now, a lot of times, a pullback will start with something that looks scary. But notice what happens to these next bars, right? Small, 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 small. And that to me says, right, this is headed down. Now, we did get a 180 here. But in the larger scheme of things, is a double dip likely, right? Because I think this is the first pullback of the day, right? Yeah, it is. It's trapped here, right? It's trapped, like Jan is saying. Now, this is a 2-minute chart, and we're getting out towards 10:30. Where do you think this is selling on a 5-minute chart? I mean, I look at this and, yeah, I'm like, on the 5, it's probably doing this, right? And I think it breaks it here and goes the other way. Yeah, it just, that's what the double dip does. It's like, oh, it failed on the 2, but the 5 caught, That's another way to think of these double dips sometimes. And like, granted, right, like the 20 is way over here, and this got way below the 20, and it's probably waiting on the 5 to just catch up to that to make a little sell set up and make a new low, because the whole thing happens there too. Interestingly, though, I think, right, I think this is the thing I was talking about, and interestingly, this one does follow through, and when it follows through, great, and you still get your first pullback, and you still get your new low, right? And that's the end of the trade, right? There is the whale complete on this one. So, I get what Betty was doing. She's not terribly wrong, but I think, she's asking, should I have taken it here? And I think so, yeah. I don't think, this one should either bust through, or you're just going to say this is going to be in that sideways stuff, right? And this is kind of why, like, Oliver is more interested in what we do in this part of the day than when we start getting out here. Because what happens is you get the first move of the day, you get the first pullback, the first attempt to make a new low, and then you've got this box that goes sideways very, very often. And how many of us get trapped in this sideways box, right? And if you just, stay short, you stay with that direction and let it play out, you'll get your whale complete. And then after this, you have a whole new stock. And maybe it'll go somewhere and maybe it won't. Who knows? But, Oliver's saying stick with this one. Stick with the down movement. Go, trail it out. And I think this is another way that Betty can look at this. Let's say Betty was short here, right? Took the short here, right? Is there really a profit take? I don't really see 3 pushes yet. These are little red bars, but I don't see them as pushes. I see 1 push below the entry. And this is kind of grinding. I see a first pullback where an add would happen. And I would call this 75%. So I think the stop can come here. Does this trade stop out? Does the short stop out there? No, it doesn't, right? This one actually makes it to whale complete where you have to take some off right here. And if you close the trade here, when it gets above this green bar, totally fine. That is a perfectly acceptable end of the play, whale complete. This should have kept going and it didn't, right? So it's interesting. It's like if you want to take a long, consider this. Have the shorts even stopped out yet? Like, is anybody who's short, are they even getting out of the trade yet? It's interesting, right? Oh, yes. There you are, Bitcoin. Boom. Just about to touch 39,000. This is the most Bitcoin has ever moved in one day. Right now. Sorry, I have this on another screen because I'm fascinated by what's happening here. It's just about to hit 39,000. And it's never moved. At first we had the biggest down move and it dropped $12,000 today, and it's already recovered 10 of that, almost 10 of that. No, that's wrong. Almost 9 of that, but still. Right? 39K is at the 200 on the daily chart. It is, right? Isn't that amazing? And the last time that Bitcoin was at the 200 on the daily chart was May of last year, which is interesting to me, which is right where it was breaking through. But yeah, that $9,000 gain here is, Oliver was saying we'd get that $10,000 day. I just didn't think he was talking about it happening this way. But make no mistake, if today closes a bottoming tail, that is massive buying, right? That is massive buying. What's happening there? Everybody's like, yeah, I got out and I changed my mind. That was a bad idea. So I hope the hodlers stuck together. All right, so I better keep moving along here. But man, that was interesting to watch. I've just got it on like a 5-minute chart to just watch this explosion. But anyway, Twitter. Here we go. Dennis, we got one of your trades. We had a short below the low, -1 lot. You had a stop up here. Anticipatory entry, event stop. I get it. Now, let's see. You stopped it out here, and then you went long. All right. So we can just barely call this a double minus location, and I don't think it's even that much of a double minus. especially for Twitter, which can really rip a number of dollars. It's almost a single minus. Actually, it kind of is. For Twitter, for this to be down, 60 or 80 cents, that's really not a big deal. It's almost just a single minus. So getting in here is not like getting to a triple minus location for me. So yeah, like you said, this is an ad right here is what should be happening. And this is your whale complete, right? Notice it makes the new low. That new low bar gets wiped out. And what do? We kill the trade. So here's another example of the same thing, right? Short, pullback, you got to add here. It does make the new low, and the new low bar turns into a bottoming tail. 1 penny above, kill the trade. You guys got that? Burned into your retinas here. Nice fluid move down, nice first pullback, new low. This bar gets wiped out. It's done. That is something, and I want you all to remember that this bar has to continue. Right? This bar has to continue. And especially after we've made it all the way to what, 11:15 here or something. This is a 5-minute chart, by the way. So I get that that's what's happening. But and it's just, I see the flip here because of the bottoming tails and stuff, and the answer is no. If you have not had a pullback yet, especially following a fluid move down, look, this something I want to show you, Dennis. Like, this was the one where you might flip and go long. Like, let's say here's your 200, and here's your position. Here's the first bar, right? Second bar. See where they're opening and where they're closing. It's getting bigger. It's getting ridiculous, right? And then maybe you get like some kind of bottoming tail or something that's just massively way below. You might be able to get a scalp in this direction. But this is a relatively fluid move. It's not a super violent one. It's relatively fluid. And when you have a relatively fluid move, this is what I want you to look for. Pay attention to the words I'm going to use here. Right? Here's the top. Here's the bottom. You have to be able to sit through this, because where it triggers, if it's at or below 50%, I'm telling you this thing is going to make a new low. Right? And I say where it triggers because you could also get this bar that comes 75% of the way back, or something like that. Or let's say you get some topping tail that comes, let's say it's 70%, and then it still triggers right here. It's still going to give you the new low, right? So don't get freaked out by the move up. You have to wait and see. You don't get to know, right? And don't start pyramiding into it or anything, right? Because what will happen is you guys will start pyramiding in, and then it'll be the one that's going to go like this, right? Forget about that. Join the black team if you want to start thinking about pyramiding, okay? But you don't know where it's going to roll over, and wherever this triggers, like, that's where the next move down is going to. Like, I'm going to say this about VBSs, right, and VSSs. If you have first a fluid move and then a trigger at 50%, that's the one that works, right? That's the one that has great follow through. So sometimes you'll see a VBS that didn't have that preceding, and I'm telling you, it's actually going to go the opposite direction. You make it the same criteria as a red bar ignored or a green bar ignored, right? So let's say a green bar ignored needs to have this before it. and then this pause is okay, to play the break, right? So the pause is okay right here when the bar before is fluid, right? Well, same with the sell setup, right? Let's say the sell setup, first you got to have this, right? Then you'll have the pullback, which can, it can come up here and seem to be getting really far. And you go, this is above 50%. It's just a zone, right? Now, this is the one that starts to work right here. And then you get this, right? It's the one that triggers, right? So you don't need to anticipate to get in any of these things. You want to see where it triggers. If it triggers at 50 or below or somewhere around there, you're going to get it, right? You're going to get what you want. So, and this one does that. So all the messiness, forget about it. Leave it alone. Wait to see where it's going to go. If you look at enough of these and say the ones that really make the new low always seem to have this preceding fluid move, you're going to get it. You're going to get the right things, and some of them kind of fool you. Like, look, this one is a move up from here, to here from here. This pullback makes you go, I don't know which direction it's going to happen. Look where it triggers, 50%. It still gets up to the new high. Am I excited about this one? No. Why? This move up isn't that fluid. These are the ones that kind of bore the crap out of me, right? I like the violent moves down, right? I want the first move to be very clear, and then anything that triggers has a good chance of going, right? The problem is we start playing these ones and they meander and we have big expectations, and you know what they do in the middle of the day? They go like that, and then they come back down here and they bounce around, and then we go, oh look, we're going lower, boom, and then what they do is they come back up, So, these times of day are really important, to pay attention to sometimes. But anyway, thanks for sharing that one. I'm going to move on here, Dennis. I hope that was helpful. So don't just go flipping everything long. All right. Now take a look at this one here from Dennis. All right, went small here. The lows held on this little 180. You identified it as an elephant bar. I actually think it's a 180. You're clearly playing against location, right? I think you didn't add here, right? Couldn't afford to do much more, I guess. So you just did one lot, maybe because you were playing against, the position. And, you just took profits out here. Now, this isn't really a checklist trade. It's more like a scalp that you did. And so, I hope you're aware of that. Right? This doesn't really fit the checklist. You're going against position. You're going against this solid red. So, keep in mind, Dennis, that you're entering when the most recent thing is a violent red move down. And I saw this too, and I'm just saying I'm staying out of this. There's just this little buy here. I was like, nah, that's not. And this, you're going to chalk this up to this phrase that Oliver keeps repeating. Not all the money, not all money is yours, right? Don't like. Can you practice this 20 times? What happens if you practice that 20 times? Oh my God, Bitcoin! There's the 40K. Wow. There it is. There it is. Exactly. Right. 40 times and you've got 20 times 20 times and you've got problems, right? You've got some massive problems. So, so you don't want to practice that, right? Yeah, no kidding, Santiago, right? 30K. I know. I'm sitting here going, what do I do? Do I like mortgage my house to like get more to buy here because I want to get more? I was looking at that going, wow. I mean, my fills were like around 37 overnight. I was like, I'd probably get stuck around 36. Now it's already above all of that. Wow. Man. Yeah, he would. He would. All right. So we're clear on this one, Dennis. I want to move on. And like, yeah, this is one where I don't like seeing this mess in the beginning when there should be some clarity. I mean, the down move is the one that should have followed through, right? This is the one that should have kept going. So yeah, there's definitely failed expectations, but not my favorite location to trade from. So here's Andrew. And Andrew identified correctly a nice elephant bar here out of, clearing bar plus location, right? Added here, so long 3 lots, added on the hidden red bar ignored, totally fine. Added again here. Now we're just getting a little greedy because I have a problem with this one because you're just increasing your risk, right? You only want one add on the red bar ignored. This is not a pullback yet. And then we had some massive add right here or something, a keystroke error, and then just close the trade, right? So by the time you were here, you were already long 4 lots. I think you took them out, you went back in, and then you closed it again. I think that's what you did there. And yeah, okay, I see what happened there. So what do we call this trade? I mean, it's just one of the ones that didn't go anywhere, right? I don't think it's a stop adjust or anything like that. I do think that you have to at least have an event stop here. So I don't think stop adjusting to here. Well, I don't know. It makes a new high. I suppose you can do that. And I think you have to because of the size that you got into, right? So you were trying to get in big on this one. And when you do that, I think moving the stop to this 180 or you're calling a red bar takeout, that's fine. It is kind of a big bar stop adjust in a way. And because of the size you were getting in, I think that's reasonable. What would have happened if you just were in, if you got in the first 2 lots here? Let's say you were able to, right when it started clearing, get in anticipatory, maybe add another one here, and you'd be in 3. And then when we get the new high, you might put in a big bar stop adjust and stop there. Might have lost less, but it's just one of the ones that didn't work. And I don't think there's a problem with it, you know. And once all this big red comes in, it's starting to look like it's going to go this way. Interestingly, Fabulous 4 held, of course. So that's one of the things that I was saying when you make your files, and this goes in the plus folder. And if you ask, well, did the Fabulous 4 hold? You'll be able to say, yes, it did, right? So where do you want to add? Like, don't anticipatory add if it's just, pulling into the Fabulous 4. Like, I'll even say this. See this red bar? it doesn't even really get taken out either. Wait for something to be clearly taken out, and then you can put your ad in, right? That's the pullback. So, another thing you could do is say, my max loss is down here. I enter right here one lot. I add one here, right? And then you let it go until it triggers. And it triggers right here, and you go, all right, this should have gone somewhere by now, but maybe I'll put +2 here. And then you say, this was kind of a big red move down, and let's see where this goes. But if I get to break even, then I might close the trade, or I might take some off. And then you might trail the rest out with the 8MA and see what happens. Does that make sense, Andrew? Like, it is possible for these ones that power trend against you to turn around if you have a big enough stop. You go, look, first move was strong green. The 200 is still my friend. You can do that. But I think best thing for you is to try to be smaller rather than larger. Get consistent on smaller size, because who's most likely to interfere with the checklist? Somebody has 1 or 2 lots, or somebody who has 6 or 8 lots? Definitely. The more you have, the bigger your size, the more you're going to interfere with stuff. So by keeping it small, and I say this to people all the time. What if you just took in one lot? You just went in with one lot, and you decided to only stop adjust your way out. And I say that because most of the time we get obsessed with taking our 3 pushes, and we never even get to practice trailing out. And the bigger you are in size, the more likely you are to do that. So thanks for that. Now let's see. Whose is this? Is this yours, David? I just wanted to, or Andrew? Because this is good, tracking your 20 trades. I like this, right? Yeah, you're welcome. Is this yours, Andrew? Or I'm just trying. Okay, good. No, good job, right? And this is what you got to do. I'd like to see more of, are there errors in here? Fill that up. It's good that you're recording, but I want to see that get in there. So, and also, now C, P, and T. What is it? So, is this just long or short? So I think this is color, position, trend, right? Just want to make sure you're using that correctly. You should just, you can change this and just write long or short and make a different column for that. But this is in case you're doing color, position, and trend. But cool. So yeah, that's good stuff. Keep doing it. Make improvements. Make the next loss even smaller, right? Now, here we go. We've got Greg. Nice short right here. Event stop. Yeah, well done. I think anticipatory is fine. There's enough size here. It's not clearing, but it is igniting. And I do like the profit takedown here. Let's see, you shorted 2, you took 1 off, and then immediately flipped this long on the 180 here. And there is violence there. And yeah, this This, taking profits there, I think makes sense. What do I want to say about this? It's like, yeah, you flip the trade on the power there. I see that. And I'm trying to think how to explain, like, over time, what is this going to do? You know? Yeah, it was good, like, immediately flipped it, but it is not exactly, this is not a stop and reverse in this. I, I don't pass into, I don't like to, this whole mess right here is trouble for that long. And I don't even want to look at it, to be honest, until it's not only cleared this but made a new high, or started to trigger. It needs to clear, and then it needs to trigger up here above everything for me to say this is really going to go somewhere. I just don't like it. Something about this, the way this formed and the way this flipped, I'm like, we've got a new trap zone. Yes, it did make it to the top of the trap zone, and this is a scalp to me. And I guess part of why I say this is right here, Greg came in and took over and went against the checklist for what's clearly just a scalp, right? And I think it needs to be recognized as such. It's a power trend scalp. Like, right? You've got to know that this is just a kind of wait and see, but there's, like, any play that you're taking into a big sideways mess is not a checklist trade, right? You're entering into the resistance, right? Because of all this and, this red bar shooting its power to the right. Entering into the resistance is not a checklist trade. So a scalp, yeah, you'll get 1, 2, maybe 3 pushes, which you did. So just understand that, like, this stop and reverse is, so we haven't talked about stop and reverse in this series, but stop and reverse also needs to happen in a place where the stop and reverse triggers has a price void to move into. Do you understand what I'm saying? It can't just reverse into support or resistance and be happy about that. That's just not the play. I've seen it happen too many times. Somewhere I should have a folder just full of those for you guys where you where you could just see that, like, we've seen so many where you could just see that, like, we've seen so many, we could get them for you, so many stop and reverse that have just happened in this group where here's a solid bar, next bar reverses right into here, right? Right? And then bar 3 to the moon. And just, so this buy, right, that got reversed, then you short it, and then the next thing you know, you're getting out up here. That's the 360, right? You got stopped out in both directions, right? And that's what happens when you play right into that, resistance area. And this went maybe further than I would have thought, but, like, it looks like it's clearing the 200, but in the end, it's just created a big sideways mess. Yeah, don't stop and reverse it. Well, okay, so is this a tight Fab 4 or a wide Fab 4? I think it's pretty tight, to be honest. 20 cents? That's not bad. I don't know this stock very well, but I don't think 20 cents is very bad. So that's part of why I'm saying that. If it was 80 cents, then I would say there's plenty of room to make a good profit. But, like, from where you entered to the top of this is 30 cents. 30 cents isn't interesting to me. It's just not. It's not a trade. It's not even enough to make me really stop anything out. Like you're gonna stop out on a. You got in here at 18 and you're nervous about 58. That's 30 cents, right? You still could have added here, but obviously you wouldn't at that point. You'd be looking to get out, break even, but that's what I'm saying. It's like if your stop is max loss per trade, it should be way up here. Even this pullback is not that big of a deal. Even though this is scary, if it hasn't reached your max loss per trade, you should be okay. Now I know yours is 40 cents on here, but that still puts it way up here. You took profits. This ad would still, right? I mean, it's just interesting to do the math and just say, what if I let it play out? Could I turn that trade into a profitable trade still? If you didn't stop and reverse and mess with everything and just do what the checklist says, sometimes, you'd be really surprised. So, but anyway, thanks, Greg, for sharing that one. That's a very interesting trade. And, these days, I am not interested with anything that's doing this inside this fabulous 4 zone. It's got to clear. And there's just something about this one that says, nah, this isn't the one to me. Okay.
Yes, that was my...
Jan, was this something you were going to answer?
Since you're 1 hour in, I think it's time for me to take over. Okay? So it's a good moment.
Okay. It's a good time.
Okay, thank you very much, Tyler.
Great stuff. All right, everybody.
Thank you. Awesome. So let's move on from here. Let me first try and share my screen. Oh no, I can't project. It's messing up again. Oh. I didn't even touch this PC, you know that? This is really... Maybe I should switch the microphone off so I can curse in proper... No, it's not going to work. I cannot project, unfortunately. Can you project for me, Tyler? To be possible? Tyler, are you still there? Yeah, would you be able to project for me, Tyler? Because I can't project. Oh, thank you so much. It's that same error coming up again, and it's just very annoying. I'll have to reconfigure this thing again. Awesome, thank you so much. Okay. So, all right, let's get started then. So checklist plus, I called this sheet, and why? Because David Reina, who is in the Spanish room, I'm not sure if he's here today. If not, and I think usually he cannot attend and he watches the recording. In any case, so he asked us a question, and he said, would it be possible for traders that have been in this group for a longer period, like a couple of months, to get some more additional points to the basic checklist? He said it's great to see the basic checklist and everything, but wouldn't there be some things that you guys can add to that, and so that say the traders with a little bit more experience get some extra things in their checklist? And I thought it would be good to answer this in the whole group here. That's why I brought it up here now. And the answer I'd like to give is that what we are providing to you is like the very basic checklist, okay? This is like the basis of your trading plan. This is the basis of events to act upon in certain locations, whether to enter confirmation, anticipation, where to place your stop, how to move the stop, etc. Now that in itself is actually a hell of a lot of information. It takes a long time to really master that, to be able to do this. Not because it's difficult, because it's actually very easy, but because you cannot do it not without proper training, right? Now, when you reach that stage where you feel that there are some new things coming up, you can actually add to that checklist yourself. That's actually the whole idea. So, for example, suppose we're talking at some point about the two-color rule, something that has come up regularly here, right? Now, what you can do is you can add to the checklist a rule that tells you something about when and how you will deal with the two-color rule, okay? And as a matter of fact, while going over the journals and reviewing your trades, quite often things are brought up or mentioned. And I'm certainly not encouraging that on every journal you're going to add a line to your checklist. You shouldn't be doing that. But once in a while, there should be something there that you pick up. There could be something there that you pick up and you start thinking, well, that is really something, that is a rule that I should be adding to my checklist. Okay? I'll give you one more example. Something that has come up several times is a rule that I have in my checklist that I have added, and that is when to use the two-bar stop rule. In my checklist, there is an extra line that I have added myself, and it says that I will use a two-bar stop rule whenever my stop ends up in an area of support or resistance. Okay, so if I trade an event and this, say a bull elephant bar, and the stop is below there, but actually that is really a support area where the low of the bull elephant bar is, I want to give it that extra room, you see, because it might very well test the low of the elephant bar and find support there somewhere, just a few pennies below, a few pennies up. I don't want to be stopped out there immediately. So that is for me a good reason to use a two-bar stop in that case, okay? So I'm just giving you this as an illustration. I'm certainly not telling you that this is what you should be adding to your checklist right now, but it's just a suggestion on how you can go about this. Okay, and I hope that answers your question, David Reina, because basically, look at it, the checklist is like the skeleton, okay? It's the skeleton of your trading plan. And with the months and the years, that should gradually become a little bigger and bigger as you discover new things that you may want to add to your checklist. Okay, so that's really your own. So instead of us adding things to the checklist for you, David, I'm actually inviting you to do that yourself, to start adding things to your own checklist. Okay, so I hope that answers his question. And I hope that also makes things clear for the other traders here. And if there are no questions about this, then I'll just move on to the next journal. All right, and who knows, maybe something will come up today. And if I see something interesting, a small extra detail, then I may call it out, okay? So, oh, I'm clicking on my own sheet here. Sorry, Tyler, can you please go, can we move to the next sheet? Clicking on my sheet and I see nothing changing, so. Thank you, okay. So I have kind of hustled the journals a little bit to make sure that, first of all, everybody gets a little bit of attention, and also to make sure that there's some of the more interesting trades where something is to be discussed are in the front, okay? I first want to deal with the first two journals. This is actually the same trade. This is the first one here is by Carla Sosa in the Spanish room, and she's trading AMD here. And I wanted to point this out because this is actually a trade that I believe many people got caught in. I saw a couple of journals come by earlier already with this particular trade in it. And so I thought it was good to discuss this. Let's see what she did here. So she identifies an elephant bar here, okay, in location minus below the MA200, if not actually at the MA200 or off the MA200, right? decides to enter by anticipation here, and places her stop at max loss per trade. I can only say that is beautiful, because not only is the entry absolutely beautiful, this is also an anticipatory entry because this bar is of plus size, right? This is an elephant bar plus. And also putting placing the stop at max loss per trade is exactly what the checklist tells you to do, because the event stop is practically at the MA200, and this is not where you want to be stopped out normally, right? So this is perfect. Entering one lot, let's see, her risk is, she enters in about 70, and I think the stop is at roughly, what is that, 40? So that would be 70 cents stop, which is perfect for a $90 max loss per trade. So all I can say, Carla, is this is absolutely perfect. This is what will usually bring you a great trade. And the only thing is it didn't work this time. This is one of those 2 out of 10 times that this thing does not work, and you get stopped out. So I wanted to bring this to the front and discuss this journal first, because it's very simple. This is a great trade. It just didn't work. This is very well traded. If you do this 10 times, you will probably get like 6, 7 winners, 1 or 2 break-evens, and 1 or 2 stop-outs. That's what's going to happen. Okay, so the next time, just play it exactly the same. Collect those trades and keep your stats on this, and you'll see that this usually works out really well. Okay. So let's go to the next journal. Same trade now by Dennis. So Dennis got caught in the same situation. Oh, and by the way, I forgot to mention, I got caught in it as well. Same thing happened to me. I traded it the same way. I also got a full stop out here on this trade. Juicy elephant bar plus actually off the MA200. Anticipation anticipation entry. Okay. Only your entry seems very early here, because this bar, and when you enter, you have like 10 cents there, right? And you say, I thought it was an igniting bar, but you cannot know that at that moment because you are entering, I think, 10 seconds after the bar starts. So that's what it looks like, at least. Is that right? Yeah. So when we anticipate, Dennis, when do we anticipate? Not after 15 seconds. Definitely not. I think you know the guideline for that. Yeah, at least 1 minute. You want to see at least the first minute of the bar in. And why is that? Because in the first minute, there's a lot of mess going on between market makers playing all kinds of tricks. It's one big chaos. Oliver always warns us for that because he used to be one of those market makers. He knows what's going on behind the scenes. And it's just a total random chaos. So unless you really know what you're doing and you're very experienced, you should not play during that time. So what you really want to see here is at least 1 minute in, and then you want to see an elephant plus, okay? Well, at this point, so you're in after 15 seconds, and there is anything but an elephant plus. I think you have a narrow range bar at that moment, maybe. Would you agree? So at what point does this become an elephant plus, where you can actually play it? Well, roughly in the lower part of the body here. In the lower third of the body, at some point you have enough size to your bar to say, now I have an elephant bar plus. I have to enter now or I'm too late. This is an anticipatory play. Okay? Is that clear? You're going to get killed if you don't wait for these things to make it through at least the first minute, Dennis. Usually 1.5 minutes is better, but it's not so much a matter of time, really. If the bar is there for 1 minute and you have a great play like this one off a fantastic location, you cannot get it any better. This is Oliver's favorite play, okay? If you see that, and I would say you wait at least 1 minute, and then as soon as you get plus status, then you enter. which is actually in the lower third of the body here. Okay. All right. So your stop is event. What's wrong with that? That's not good. Stop event. Why is that not good? What is wrong with stop event here? Exactly, near to NMA. So you need to use a max loss per trade stop, right? So that is the second thing that I'd like to point out here. You have to use a max loss per trade because you do not want to be stopped out in near the MA200. Okay. I'm sorry, you said yes. So 200 going up and 20 going flat. What does that relate to? I'm not sure what you're trying to say there. All that matters here is that this thing ignites off the MA200. That's all that counts here. The 20 is not relevant in the open. We don't really look at it. And the 200, whether it's up or down or flat, is really not relevant. Remember, I explained to you guys the last time that, or the time before, I don't remember, that the MA200 is actually the MA20 in like the 20-minute chart or the 15-minute chart, roughly. Okay, tells you where that is. So you got it. Okay, perfect. All right. So so you're being stopped out there, which is actually a bit early. Let's see. Well, okay, it's a bit early. Then you re-enter into the trade on a hidden RBI. All right. What if you color in the first 4 bars here, Dennis? What does that look like if you would color them in? If you join the colors there into big bars, what do you see there in the first 4 bars? What does it look like? Green power elephant bar. Well, I'm more thinking about a bull 180. Exactly, David. A bull 180, right? Because look, you see like a big red move down, and then you see a big green move up. So you have a huge bull 180 there, right? And you're going short there against a bull 180. That is not likely to be very successful, right? I mean, you will be successful one in every 10 times, maybe even twice every 10 times, but the other 8 times you're going to get killed. See, so that is not very good odds. You see what I'm pointing at? Oh, sorry, he went long, re-entry, because he says re-entry here. Oh, okay, I see it now. Okay, re-entry. sorry. Yeah, okay, so he went long here on the hidden RBI. That's actually a very nice entry. That's actually very nice because here you see we're at the MA200 and now we have a low risk entry to the long side coming from the green here, from below. Okay, then taking profits there and making back the money. Okay, I see it. That's nice trading. Yeah, I like that part. I like that part. But the short should have been the big trade here. And I think you have to take some notes there on how to improve on that. Okay? All right, sorry for the mistake. So I think we can go to the next one, please. The next one is from Hamsarai, who can never attend to these sessions due to his job. But he does send in his journal. So Hamsarai has a max loss per trade of $90 here. Okay. Trading Cisco, drawing in the Fabulous 4. All right. And he identifies a bear elephant bar, off position, minus. He has a minus in front of it. I think that what he's trying to point out there is bear elephant bar in position minus. Okay. Enters by confirmation with 2 lots. That's his first step, and the stop is event stop. So that is okay. Oh, Hedrick still has a question on the previous trade. Yeah, we can quickly do that. Let's see. Oh, okay. AMD Gregory is saying, question about the AMD trade, immediate failure of a perfectly looking pattern. Does it provide new information to act upon? You went long in the trap zone. Okay, can we go back to the previous sheet for a second, Tyler? So, does it provide new information to act upon? Yes, it does, because if you look at it, you see this big bull 180, right? So it seems that the path of least resistance is to the upside. The only thing is, of course, that the congestion zone is right above you. But this is a very violent move. I wouldn't say it's violent. It's not violent or quick enough to really trigger a stop and reverse here. That and certainly not in this location. But trying a low risk entry to the long side here at the MA200, knowing that what you have just seen is like a bull 180, a big one, yeah, I think that's a great trade. There's no problem with that. What about going long into the trap zone? Well, in general, I would say don't do that. Certainly not in your first trade. So to do that here is, I think, it's a little bit advanced, but you can give it a shot because of what happened before, the failure to move to the downside and the strong move up. So you can give it a shot here with a low risk entry, yes. But in general, I agree. If you don't feel that you're up to this, don't try this. Don't trade in the trap zone. Just skip that for a while until you're ready to do that. Okay? Does that answer your question? Low risk is the key here. Yes. Well, another scenario could be a little pullback here. If it just starts dropping into the shadow of that green move up, and say it pulls back to 50%, and then that could also be a long play actually, because you have such a strong bull 180 here preceding that. But these are somewhat advanced concepts, you know. You may not be ready for that because you are trading against the location here, against the position. You have to really understand what you're looking at here, okay? So there's nothing wrong with not doing that. This is a little tricky. You need some experience to see this and to do it. And if you don't feel that you have that experience, then just avoid the entire trap zone. Just don't do it, because in many other cases you may get killed if you don't know what you're doing. All right? Okay, hope that answers the question. So back to the next one, please, Tyler. You're welcome. Okay, so we're playing Cisco here. Hamsara is playing Cisco. So he enters below that bull elephant bar on confirmation, 2 lots short. Places his stop event, meaning above the bull elephant bar in location 1, right? Then and comes stop 2. So he lets this thing drop down, and then it bounces back up. There's the pullback, right? He adds on the pullback. Actually, he adds 2 lots there. Okay, adds 2 lots there, and then takes 3 off on what is barely a new low. Okay. And then trails 1 out all the way using the 8MA until being stopped out in step 5. And that is the trade. So very nice. This is a very nice trade, of course. Let's have a quick look at it. First of all, I think we have to look here. Do we have 3 pushes? Meaning, do we have the right to take profits here? I think that's an important question here, because although it's only a right to take profits, right? It is not an obligation. It is still, of course, a good thing to do that if you have that right. And if I see this correctly, I think he has like 50 cents profit here, 40 cents, and roughly 3 pushes. So a profit take seems like a good idea here, right? And actually, what is the best point to take profits here? I would think exactly at the low, in that little tail where Tyler put the X. Why is that? Because it just took out the bottoming tail bar there, right? And the takeout of a top of a bottoming tail bar is a very strong thing. That tells you that there seems to be more downside. So you don't want to take profits immediately, but on the follow through, you wait for the follow through, which is exactly the bar that makes the low. Okay, so that is the perfect point to take one off here. Survive the pullback, absolutely great. Then he adds 2 lots there to the pullback, and then the thing I don't understand, he moves the stop down to the big bar stop. When are you supposed to move your stop in the checklist? When does the checklist tell you to move your stop? After the pullback, that's right. And how much, we don't want to do this immediately because we don't know if this is the pullback. We have no idea if the pullback is complete. So you need to wait for this thing to drop like 75, maybe even 80% before you decide that that infamous double dip is likely not going to happen, and it's safe to move the stop down, right? So moving moving your stop to number 2, the big bar stop, is actually not something in the checklist. It's wrong. And as a matter of fact, if I see this correctly, it's a little small, but I think he would actually already be. That's not even the high. The high of that big bar, I think, is below the pivot a little bit. Okay. Okay. So better would be to wait until you have like those 80% down after the pullback, and then you move the stop down. That would be what the checklist is telling you to do. Then also, when you see the new low here, well, he has, at that point, he has 4 lots, right? So why not cover 1 there and try to get some more? Because in many cases, you will see much more of a new low. It will break that low, and it may go down another 20 cents or 30 cents. So by covering 3 there, you're basically saying, I'm not interested in any more profits. I have enough. Okay? I don't want any more money. I already have money. That's basically what you're saying here. That's, of course, not a nice thing to do. So it's best to take profits on follow through on the new low. But if you have 4 lots, I think it's perfectly okay to cover 1 lot there at step 4. But then throw another profit take order like 10 cents lower and throw another one maybe 10 or 20 cents further. Okay, just see what happens. Now, that didn't work here. It loses the new low. So what do you do when it loses the new low? Well, then you have to take profits anyway. It didn't work. Okay, so that is what he could have done here. And then riding out this thing with the MA8, that is very nice, of course, because the stop is still, let's say the stop is at the pivot, right? Then he's not being stopped out. Then he sees the power trend, and then he changes to an MA8 here. Is the MA8 actually the right stop here? Anybody have an opinion about that? Is the MA8 the correct stop to use here? David says no, and why is that? Carlos, why is that? What would you be using here? What is the correct stop to use here? Probably. David says not a power trend. Yes, this is definitely a power trend. This is as power trendy as it can get, I think. Bar by bar, no, because it's a power trend. See all the small bars, this is drifting down there. So the only thing is that what I don't like about the MA8 here is that it's actually too tight. You see, it's touching all those bars, and you really want to see a stop that is a little bit away. Exactly, Carlos, like the 13 MA. That would be better because you give it that little room so the volatility can just occur, right? It can move up and down a bit without immediately hitting that stop line every time, and you're going for the 1 bar stop, 2 bar stop out. So 13 MA would be better here to use, definitely. That would probably give you a nice little overhead space. Keep a little distance from the bars, okay? But this is definitely a power trend. What is a power trend? It's grinding, right? Okay, no, David is saying I was referring to point 4. Now at 4, it's definitely not a power trend. That's true. But see what happens. Our stop should be here at the pivot, right? So if you can you draw a pivot stop there, Tyler, from the pivot all the way to the right? Because then what you see is that we just stay in this trade, right? We're not being stopped out. And at some point, roughly where the words AMA trend are, at some point there, you're starting to see like quite a few small bars, and this thing is just grinding down, right? Power trend. Gotcha. And that is the moment when you start to look for a proper trailing stop, which in this case is probably the MA13. All right? Okay, so let's move on to the next one. The next one is eBay by Greg. Greg is here. Yes. Okay. Hi, Greg. So eBay 2 minutes. Let's start with a note here. A bad choice of entry completely changed the dynamics of the trade, including profit take and add. Let's take a look at that. Okay, so we are seeing a fabulous 4 here, and that fabulous 4 is somewhat wide, 60 cents. Okay. Then we're seeing an opening bar here. Let me see. Your identification is bottoming tail bar, clearing in position plus. You're going for a confirmation entry here, and your stop is below the low because this is an event stop. Okay, that's perfect. Yes, as you're writing, a better entry would be, because this is a bottoming tail bar plus and it's violent. You might consider to get in a little earlier. But then again, Greg, I can also see that you want to see this thing break out of the Fab 4, and especially with the MA200 on the upper boundary, right? So I cannot blame you here for taking a confirmation entry here. Of course, it would be nicer to be in earlier, but there's also a risk to that. See, if this would have been a bull elephant bar coming all the way off the low there, right, in one solid move up there, it's a little different, because then it gets really violent, and you can actually bet that it's going to break the top and the MA200. However, I think this is a little borderline. Had this bar been like 10 cents up, 20 cents up, whatever, then there is no doubt about it. This is an anticipatory entry, because now you're free, you're out of the trap zone, right? But the location of this bar is a little tricky. So I can certainly see why you would want to wait here and accept a confirmation entry, which you know is a little inferior maybe, but one way to fix that is you enter one lot there, right? And then you can throw another lot below there in the shadow of the green bar, hoping that it dips back into the zone and gives you a cheaper fill there. That's a trick that Oliver often uses, right? I think you know what I'm talking about. Okay, so you're in with 2 lots here, and that means that you have a risk of approximately, that will be $80, right? And max loss per trade is $80, so that's, you roughly have used your risk here. Okay, profit take there. All right, what's wrong with that profit take, Greg? What is wrong with that profit take? Well, wrong, wrong, yeah. Oh, PT, no, wait a minute, PT is profit take or not, or am I misreading your chart? Is that where you should have taken profits in hindsight, or what exactly do you mean? I see PT above the 4th bar here. I think you're trying to say that this is where you should, where you think you should have taken profits in hindsight, or maybe based on the better entry. Okay, yes, if you got in earlier, you could have taken profits there. Okay, I get it, yes. Yeah, that makes sense, actually. That makes sense, because then you have a substantial gain and you have your 3 pushes. In this case, this is a little difficult to take profits there. However, you have a very strong support zone here. Your entire fabulous 4, you have that green, that first bar, and the tail of that bar is green, right? Because it came all the way off the low. So you have a lot of support there, and the MA200. So there's really nothing to fear here. 7 or 8 out of 10 times this will hold. The other 2 times you're going to be stopped out. Well, okay, that happens. There is no, that's the trading business, right? But the likelihood of you being stopped out here is low. It's like maybe 25% or less. Okay, So 3 out of 4 times, roughly, you will be coming out of the straight fine, possibly even with a huge profit. So stay in the game here. Let that stop be there, no problem. Okay, we dip back. You cannot add because you already have your full max loss per trade. Awesome, that is great because does everybody see that? How he's actually managing his risk in towards his maximum loss per trade, how he is aware of the fact that he cannot add there. That is great. That's fantastic. That is very important. This is what we are always talking about in the first lesson, the first session of this coaching program, right? Trying to drill you guys to respect your max loss per trade. And this is a great way of doing it. This is what this is all about. Okay, and then takes profits here on the whale completes. All right. Yep, that is, I think you have that right, definitely, because you see this green rally there. You could have maybe tried to get a little bit more out of it. It looks like your profit take order was just above the highs, right? Just above. And you can always throw it a little higher, just see what happens, right? If it drops back, you can still take profits. You get a few pennies less, but you may also get 10 pennies more, see? So it's good to be optimistic there, I think. But it's not wrong. It's not wrong what you did here. And then then you go bar by bar here. Okay. Did you think that was wrong? No, I think that's okay. It's actually, you have a choice here because now you are in profitable territory. You have your wheel complete, and it's really up to you what you're going to do with it. Okay. So basically, you have 2 options now. Option number 1 is what we often refer to as the boss approach or the live trading camp approach. Caught the whale, I'm done. Okay, so you go bar by bar or you take the entire profit and you're done. There's nothing wrong with that. Let's say the mentorship approach, where you basically try to learn how to milk the trade. That's a different approach. If you do that, then you cannot, of course, not go bar by bar here, because that's, as soon as going bar by bar is the same thing as asking the market, please stop me out. In fact, right? You just want to get out of the trade. Going bar by bar means you do not want to be in this trade anymore. You just want to get out. So if you really want to milk this trade, you cannot use bar by bar. What you can do is either use a moving average, which in this case, same thing. The MA8 is very tight. You see that? The MA8 is very tight, so that's not the proper one to use. In this case, you would probably also want to go back to the MA13 here and just trail it out and see what you can get. So in this case, that would have given you a little bit more profits on the last lot. You would have likely been stopped out. Yeah, a little lower, Tyler, because that's the MA8 that he has on the chart, right? And actually, that should be the MA13. So, but you would have been stopped out to a bar. Yeah, that's probably the place where you would have been stopped out. So in this case, it wouldn't have given you that much more. But I think you all have seen over the last few weeks, have been quite a few trades that have been running for dollars. Okay, and if you are out of this trade and it runs for another $2, you're sick, right? You don't feel good. And that is actually something you should be focusing on. Prevent that from happening. Make sure it doesn't happen by giving that last lot the room, trail it out, just see what happens. And 7 out of 10 times, it will not bring you much. But those other 3 times or 2 times, you may catch like a $1 or $2 move. Okay, and that's what you're doing this for. Okay? So this actually is a good opportunity to talk once again about putting the MA8 on your chart, yes or no. Actually, somebody just asked me that again in the Facebook group. Do you have your MA8 on the chart, or do you put it there when you need it? I always put it there only when I need it. Okay, it's never on my chart. And there's actually 2 reasons for it. The first reason is the one that Oliver taught me many years ago. He's always saying, look, what is really important here is the distance to the MA20. If you put the MA8 in between, your eyes will actually fool you. They will make you believe that the distance is different, because you will subconsciously, you will be estimating the distance to the MA8 instead of to the MA20. So it actually does you a disservice, okay? So that's actually the main reason why I don't have it on my chart. I don't use it anyway. The only reason I use it is to trail out a power trend, or maybe after the whale complete, okay? Now, there's a second reason why it doesn't make sense to put it on the chart, in my opinion, and that is what you see right here. The MA8 here is the wrong moving average. What you need here, just like in the last trade that we just saw, you need an MA13 here to trail this trade. You need distance to the bars, right? So why do you put the MA8 on your chart if you're not if it's the wrong MA anyway in many cases? You see, so not only does it actually cheat you when we're talking about estimating the distance to the MA20, but also once you do need an MA8 to trail, there's many cases where it's actually the wrong one. So the best way to go about this, in my opinion, and I'm totally with Oliver here on that one, and he phrased it really well a couple of weeks ago. He said, I really liked what he said there. He said, some people they do this because they're lazy. They don't want to put the thing on their chart. They don't want to have to do it. They're just too lazy to add it to the chart when they need it. But that's the wrong way to look at it. You should actually look at it the other way. You are celebrating. The act of putting the MA8 on your chart to trail out the trade is an act of celebration. You should be cheering there. This is fantastic that you reached that stage in your trade. So I think that is actually the right way to look at it. So so I just wanted to repeat that here, okay? Hope that helps. I hope I can win over somebody for this anti-MA8 school. I know it's a hard battle, but this is one of the few things that I'm really strong about. All right, so let's move to the next chart, please. Trade by Akke. AMD, 2 minutes. Okay. So he sees a GBI here in position minus confirmation. Event or max? Which one is it? Oh, max loss is $100. Okay, I see. Okay. So I don't really understand your identification of the first bar. Oh, wait a minute. Are we talking about the first trade at 9:30? Yes, right? That is because I don't see a GBI there. Oh, but I do see a GBI at number 3 there. I'm talking about the one on the left, okay, because to me that is a topping tail bar. Definitely, that's a topping tail bar entry. Wouldn't you agree? The 932 trade is definitely, identification is TT, topping tail bar. So you enter below the low of the topping tail bar. Okay, that is a great entry. This is a great play. You are in position minus, single minus, meaning still pretty close to the fabulous 4. And there's your topping tail bar, and you enter a confirmation below that bar. This is this is a 10 out of 10 play, right? This is something you take every time when you see this. You just do it. You don't even think about it. So my question is, number 2 is, you're actually closing the trade again. Why are you closing the trade? Why is your stop not above the topping tail bar, and why are you closing the trade there? That doesn't make sense to me. I mean, also the checklist clearly tells you stop event here, right? Stop event, and you're in the trade and you see what happens. You just follow the plan. So I'm a little puzzled about that. One of those that I was telling you guys about today. I don't know what you're referring to, but out of 10, how powerful is that topping tail bar? Okay. And what is the answer to that, Tyler? It's very powerful, right? Oh, 6. Okay, fine. Okay. At the perfect position, yeah. This is absolutely a bearish event at a bearish location. You have a match here. but it stopped out. Okay, that happens, right? It happens. It's yeah, the markets can be a little tricky these days. That's true. That's true. But that doesn't mean that you have to start deviating from the plan, you know? That is the worst thing you can do. The worst thing you can do is now try to start to outsmart the market here. Just say, oh, okay, I have my plan. But you're trying to trick me. I see what you're up to. No, I'm just overruling the plan here because I know better, okay? Because that will destroy your trading career if you do that. What you need more than anything is a solid ground, solid foundation of your trading. That's what you really need here, where you always do the same thing at the same moment, and not that you're starting to do things because you think that maybe this time it's different, or maybe the market is going the other way, or we are in a market where I don't trust anything anymore. If you do, you're lost. If you do that, you're dead. That's not going to get you anywhere. Okay, so let's quickly look to the second trade here. So you would have been stopped out here anyway. Okay, it happens. And then you see a clearing elephant bar. I hate to disappoint you, but I don't see a clearing elephant bar there at all. I don't even see an elephant bar. So which bar is that? That's step number 3. Clearing elephant bar. I do see a GBI there. It was total red. Okay, okay. But even if it's total red, is it really an elephant bar? I mean, look to the left. Look to the left. What are the 2 biggest bars there? And what color are they? They're green, right? Those 2 big green bars there. Now you see a bar that is, I think when it was totally red, it was like half the size of the bar of the last of that big green bar there, right? And is that an elephant bar? It's too small to be an elephant bar. It's just a bar, but it doesn't really have elephant size. Okay. So, small, yeah, baby elephant. Okay, baby, but okay, baby elephant. Right. Now let's take a look then at it. Take a look at those bars before your entry number 3, right? Everything to the left. Who has the ball there? The Bulls or the Bears? Where are the big solid bars? Absolutely, the Bulls, right? So you have location, but the color is not in your favor, not at all. You're actually going against green color, and there's even a support coming from that big green bar all the way to the right. You're actually entering straight into support here, okay? Now that's a little bit more advanced, of course, but what that looks like to me is a big move up, and a pullback where you're entering actually is actually looking like a pullback. Okay, but of course you have the MA200 above you and everything. I get it. So a low risk entry is okay. GBI. So you want to play something here, then play the GBI. That I can see. You can play the GBI. Although still, I'd like you to see that big green bar is shooting support to the right. Okay, it's shooting support to the right. So you're really entering straight into the territory that's actually claimed by that bar, by the accomplishments of the Bulls. It doesn't mean it can't work. It works. In this case, it did work actually, okay? But in many cases, it will give you trouble. Something to be aware of. All right, so you're going down here. You're short 2 lots here. Your stop is, yeah, your stop. Where is that stop? What is wrong with that stop? Where should that stop actually be? Max loss per trade, there you go. Yep, because you are actually just telling me that you have location in your favor, right? I agree with that. Location you have in your favor. What is the most important part of your location? The MA200. But by placing your stop there, you're actually not allowing that location to do its job for you. You're not allowing it to work for you. That is the problem here, okay? So, okay, going down, then you cover on the new low, okay, you move the stop to the pivot. That's perfect. And I guess you're trailing out with a bar by bar. This is not in your journal, but from where you go out, I'm assuming that, or you just close the trade. Maybe you just close the trade where it says will complete, right? Closing the trade is not in the checklist really, but okay, yeah. And is this really a whale? Yeah, it's sort of a whale, you know, but I don't know. Yeah, don't know what to say about it. But as long as you understand that, okay, your location where you started this trade, I can see the location, but you're not really using it to your advantage because your stop is not above the MA200 on max loss per trade, and you're shorting straight into support there. But it worked. Okay, it worked. Congratulations. But if you try this 10 times, I'm not sure that it will work more than 5 times, probably more than 3, 4 times, I think. Okay, all right, next trade, please. You're welcome. Okay, trade by Carl. I think it's Carl Mellon. He's not here today. Okay. All right. Trading C here. And also Carl starts by drawing in the Fabulous 4. I always like that, as you know. 60 cents wide, a little bit wide. Yeah, not really wide, just a little wide. Then sees an elephant bar plus there, igniting off the MA200, actually the MA20 of the Fabulous 4, okay, and buys 2 lots there, anticipatory location trap zone. Oh, sorry, not really. It's not really the trap zone, the location. It is actually location plus, right? Because at that moment, at the moment of entry, he's clearly above the Fabulous 4. So the lower end of the bar may be inside the Fab 4, but the higher end of the bar where he's entering into the trade is definitely above the Fab 4. So that's location plus, okay? Stop event, perfect. It's not close to the MA200 or so. So this is cool. This is a great, it's like a great play, right? So there we go. It goes up and down a bit. He adds 2 more lots here. Oh, no, he doesn't. Sorry. He gets stopped out there before the stop is actually hit. And he says there's an error with my stop loss. Yeah, somehow he got out just too soon. And that's really painful because this trade just works. The stop would have kept him in the trade, but that's just a little mistake then, okay? Re-enters into the trade. That is nice. Re-enters in the trade. Sees his mistake. Understands that there's still a trade here. It takes out red again. And that's a great reason to get back into the trade. I see no stop loss there in the chart. But let's assume that it's the same stop loss as the first one. Because that would make sense, right? There is nothing that's really happened. So, okay. So moving up there. Adding 1 lot at 0.4. And there's no reason for the add in the chart here in the journal. It's likely a green RBI. Okay, green RBI meaning an RBI after 2 big green bars, but the color of the bar happens to be green, but that doesn't matter, right? That's the same. Red or green doesn't really matter. Okay, takes profits then at 5. Okay, that's nice after the red bar. Not the bar immediately after, but the bar following to it. Perfect. Takes another one off, 1 higher there, and then goes bar by bar. You guys remember I just said, when do you go bar by bar? Well, basically when you want to get out of the trade, right? You don't want to be in the trade anymore. And that's exactly what he's doing here. He sees this rally and he decides that he wants to get out of the trade. So, no, I'm misunderstanding this. What's wrong with me today? No. He's adding there. Oh, no, he's adding there. Okay. Okay. Adding there. Yeah, well, these are not the best places for an add, of course, because now we are far above the MA20. and we have quite a rally going there. When do we add to a trade? When do we need to add to a trade? When do we have mandatory adds? Well, first of all, on the first pullback, right? And the second one is on an RBI. The first RBI, sorry. Well, that already happened. He already added on the first RBI. So this is at its best. Well, actually, there's another red bar there. So it's like the third RBI. So this is very late in the move. How much more do you expect after a rally up there? It's already $1 up, this stock, right? And now you're going to add on an RBI, basically hoping that it will go up another 50 cents or $1. That is not really likely. The odds for that are very low, okay? So adding there, and especially adding more and more and more, that's not a good idea. That's not a good idea. It's just too late. And I think he's giving back all his profits there until he's finally being stopped out at 10. And I think that is probably stop number 6 that takes him out there. I think stop number 6 is still pending there. So, yeah, so here the ads really really messed up the trade. Unfortunately, it was a pretty good trade until that point. And that's really a pity, yeah. So, so David says, been there and done that. Yeah, right. Yeah. Oh, yeah, definitely. I also have been doing that at some point. There's no doubt about it. Tyler says, adding 1 might be okay as it gets close to the MA20. Okay, yeah, number 9. Number 9, possibly you could possibly do that. See it as a pullback. You could try and add there. I can see that. Yeah, but number 7 and 8, definitely not. Definitely not. There's no pullback or nothing like it. No. Then stop out there. Yeah. Okay, so better would be here to survive that pullback and add there where Tyler is indicating at number 9. Yeah, and then you get stopped out at 10. Okay, yeah, that could happen. Yeah. Okay. So let me see. Do we have time for one more, Santiago? Can we do one more? Okay, perfect. Let's do one more. We have a trade by Victoria on Cisco. Okay, so fabulous 4, of course, and then identification is an elephant bar. Elephant bar. Where is that? H meaning hybrid. Elephant bar or okay. What about bottoming tail bar? I think it's more like a bottoming tail bar, to be honest. Okay, so because you see, hybrid is really like elephant-sized tail and elephant-sized body on top of it. I don't see that here. I don't really see compare to the bars in the congestion zone. See the bars in the congestion zone? They are like roughly this. There's like 2 bars in the congestion zone that fit in that bar. So it's not really big. It's not huge. It's not an elephant bar because it can be an elephant bar because then the body should be solid, and it's not. We have a big tail there. So for lack of a better name, I would just call it a tail bar here. At least the lower half of it is a tail. But okay, as long it does in the end, it doesn't really matter what you call it, as long as because this is an entry event. Let's put it that way. So no matter what you call it. Okay, so you're entering in position plus. That's correct. Entering by confirmation. Perfect. You could actually no, you couldn't enter any earlier because this bar is just too small. It's not really plus size. And this is why I think the name hybrid is really wrong here, because hybrid really suggests that it's very big. Stop loss event. Okay. Stop loss event. Is that correct? Is that correct? I think you're about 6-7 pennies above the MA200, right? So you're actually pretty close to the MA200. Because of my risk, the stop would be in the middle of the trap zone. Okay, but at least it would be below the MA200, right? And the MA200 is the strongest part of the trap zone. The MA200 is the most important support resistance, right? Because it's actually MA20 in the 15 or 20 minute chart, right? So yes, max loss per trade here. Below that MA200, because if we drop to the MA200, there is quite a chance that it bounces there, okay? If you can get it below the Fab4, even better. If you cannot afford that, then in the middle of the Fab4, but at least include that MA200 in your stop area, okay? 2 lots long here, adding on the RBI, perfect, okay? That is the mandatory add in step 2. Step number 3. Step number 3, you see 3 pushes there. Yeah, I think you can agree to that. So you should have taken 1 lot, meaning you did not take 1 lot. Oh, you took 2. Sorry, I see it. Yeah, you took 2 lots instead of 1. Yes, it's better to take 1 only, and then maybe. You see, a good way to go about this, if you have 3 lots in your first leg and you want to take profits, you have the right to take profits, take 1, okay? And throw another profit take order, maybe 10 cents higher. Just see if it gets there. If it gets there, then it's okay to take a second lot off and be left with only 1 lot. See? And otherwise you try and survive the pullback with 2 lots. Okay? So, number 3, then number 4. Okay, I'm getting to number 4. You decide to go to a color stop. All right. And then number 5, another stop adjustment to the bull 180. Bull 180. That's actually a bear 180. How can you adjust a stop and a long trade to a bear 180? That I don't really understand. It doesn't make sense to me. Would it be more logical to put your stop? Well, actually, there's a very logical stop here. Around 0.4, what does this look like? When you get to 4, right? What does this look like? What's going on here? How is this thing trending? It was real complete. Yeah, is that a pullback? No, I wouldn't call that a pullback. Not sure everybody would agree with me, but I wouldn't really call that a pullback. No, I'm looking for this. To me, this looks power trendish. This looks like a power trend because you see, if you have a leg, what you really want to see in a leg is actually like at least 2 solid bars, right? You want to see push, push, push in the leg. That's really what you're looking for. This is not really doing that. It's more like drifting up. See, there's a couple of small red bars in there. So at some point, basically what you see here is like bars in there. So at some point, basically what you see here is like a power trend. And I don't really see a pullback. So I would say you have 2 options here. Either you go trailing on a power trend, or if you want to be correct, you should actually wait for the pullback, which comes later, and then you could stop. You move your stop to the pivot, of course, right? So trailing it out as a power trend is actually not correct, because if this is the first leg, you're really not allowed to do that. But at some point, if this thing just keeps going up like that, you see, you may have to overrule that and say, okay, this is not going anywhere. This is not a leg as I expected. Okay, this is not a real leg. I don't really see the pushes there that are supposed to bring me up. It's more like it's drifting up, actually. So it's power trendish and it's going on for a long time. You know what? I'm kicking in a trailing stop here. Moving average 8 in this case seems to be doing a good job here. Okay? Or if you don't want to do that, then move your stop, keep it at the collar there, survive the pullback, and then of course you can wait for the new high. All right? Okay, so Tyler, if you could insert a blank sheet here, then we can move on here. Continue tomorrow, because listen, traders, we have decided now to move this because on Monday we had a problem, right? We could not do the session. We had to cancel it last minute. So then we decided to move it over to Friday. But Friday there is a conflict with sell start. So then either we have to wait until sell start is over, or apparently there is no mentorship sessions this week, which means that tomorrow there is nothing going on. Tomorrow is an empty day, and that means that we can do our coaching session tomorrow. So tomorrow will be the makeup session, not on Friday, but we'll do it tomorrow on Thursday, okay, at 11 a.m. 11 a.m. So tomorrow we can continue where we left off now with the journals. Feel free to send in some more journals, and we'll take it from there, okay? And what else did I want to say about that? Yeah, I've also put that in the email again, that the session is for tomorrow instead of Friday, okay? All right, then I'd like to thank Santiago Vélez for translating today. It's always great to have you here, Santiago. And thank you, Tyler, for the first hour